Good afternoon. We are going to talk about today a stock which belongs to a company which makes aspirational products, tablets, mobile phones, which are aspired to be possessed worldwide, from young generations to executives to anybody who believes in good living. The company is Apple, and we are going to analyze the stock technically today. As you are seeing the end of the day chart here, from June till now, November, what we find here is that Apple started its journey at around 560 levels, moved 700 to 700 plus, and then had a great fall, what you're witnessing here in the graph, to levels of around, which is at present, it is here at 580. S&P is trying to move up and Apple is falling. So people are starting thinking that why it is happening so. As we are trying to see here on daily charts, there is a support here in this region, which is known as a support band of 585 to 560. If prices hold, which our view is that will hold, then we will see a stagnation in falling and prices can move upwards and they will face a stiff resistance at around 650 levels. A particular point to note here is that stock prices are taking great support at around 200-day moving average, and the prices have never fallen from 2010 to 2012 below 200-day moving average, except for a brief period of July 2011 where it was there, it breached 200 DMA for a day or two. It always took support at this level, and so whenever there is a nice stock which is trending nicely upwards, takes a support at 200-day moving average, it is point to be noted. It is a time where we should take notice of the stock, and so we are trying to make this video to make you understand the importance of 200-day moving average. The 200-day moving average exists here. So first of all, we will try to see how Apple had a fall and what were the reasons technically that if we could have point to short it. This is a beautiful stretched run that this is a weekly chart of Apple, and this is a beautiful stretched bull run from the levels of 360 to 700 plus. Seems like it has doubled in a year and a half time. So what we found here was that at this point this was a hanging man pattern, which is quite a bearish if it comes up after a great stretch run. So here it was a warning sign, and then what you find here is a classical evening star, which has been negativity has been compounded by the existence of these two levels, these two patterns. And you will see that this was a classical evening star because it opened a gap above the close of this hanging man, and then in the next is a real red candle, and it really validates the evening star pattern. So people will have and should have shorted here. This was a great opportunity to short at this point. And if one could have shorted keeping a stop loss at somewhere around 720, 722 plus, they could have been reaping a great benefit. If somebody missed this kind of thing, then one can say this was a previous high, and once this was at a 650 level, and once this was breached, there was a second opportunity to short for another 60 points or so. So technically, we never know that what are going to be earnings of Apple. We never know that they will be having earning misses. Nobody knows that. Even the Apple guys who are there throughout, they doesn't know. But these charts too suggest something, that there were two great opportunities to short this stock. And if we really see that in a worst case scenario, the stock will have at around 550 a great support. Once this is breached, all hell will break loose for the stock, and stock can come tumbling down to 425 levels. So one has to watch very carefully on a daily chart at 200 DMA, and after that there will be one more opportunity at 550, 555 levels to watch for. Once again, we will go for a daily chart, and what we find here is that even on the daily chart there was quite an opportunity that when the stock prices were rising, volumes were dipping here, and then when it started falling, the stock prices were falling, the volume was increasing. What you can see here is a classical distribution pattern, a distribution that the long only people or those who were strong hands were giving away the shares, and weak hands were collecting it. And once the start of this collapse started, it started really collapsing to these levels. Now what we are finding here is an accumulation. There was a hammer pattern here, then there was a doji, and on 2nd of November very less volumes. That means the selling pressure has really weaned away, gone away, and stock prices can take a support at 585, 587 level and can move still up to 650. We'll watch the stock and we'll keep you updated about the prices. Thank you.